the former Dallas Fed President, Robert Kaplan. Mr. Kaplan, it's nice to see you again. Thanks for being here on this important
Good to
day.
see you.
How much of a spot, so to speak, is the Fed in here?
Well, the Fed isn't, to me, it isn't in a spot of its own making. It's dealing with a number of structural changes being driven by the administration. Having said that, inflation is sticky. It's likely to get stickier because of cost issues and supply side issues. And yes, growth is slowing. We don't know how much. And I think for the Fed, the smartest thing they can do, which I think you're hearing, is rather than jump into this fog, it's to slow down and let it clarify and be patient and don't make decisions before it clarifies. And that's what they're going to do.
But part of the issue here is, you know, you're dealing with the slowdown in the economy that seems undeniable at this point. You're dealing with still sticky inflation, which also seems undeniable at this point. They have to decide which part of the mandate matters more. Potentially, there's going to be a moment where they have to make a critical decision. Can they do that? And what do you think it would be?
So let me tell you what I would do, and I'd be arguing for in my seat at the Fed. As long as inflation is sticky, I'm going to be reluctant to lower rates. Having said that, if I see a slowing in the economy beyond, and I mean below 1.75%, such that it creates a meaningful spike up in the unemployment rate, then I'm going to have to consider taking action. But I will tell you, if we wind up muddling along at 1.5, 1.75 growth, and the unemployment rate kind of inches up, but because of lack of labor supply, which is a new factor here, lack of labor supply, the unemployment rate doesn't inch up as fast as I would have thought, I'm going to be reluctant to move. The trigger for me would be a spike up and a concern that we're going to have a dramatic move up in unemployment and a downward cycle there. And so that's what I'm watching for.
When does stagflation start to raise real alarm bells within the Fed? Do you think they're thinking about it now?
Yes.
And would that be their worst nightmare?
It's where we are right now. Growth is slowing. Prices are sticky. Listen, up to January 20th, the sticky prices were due to excess demand, in my opinion, because of excess fiscal spending. We're now pulling off the fiscal spending. That by itself would have been, I would guess, would have slowed growth, but would have been disinflationary. But we're replacing the demand-driven inflation with supply issues, lack of labor supply, tariffs, cost issues. And so the uncertainty, as your guests have been saying, is causing consumers to be more cautious. It's causing businesses to be more cautious. We are in kind of a slower growth, sticky inflation period right now. That is stagflation. The issue is growth going to slow dramatically more than what we're seeing, i.e., is it going to go from expecting 2.25, 2.5 to 1.75? Is it going to slow to 1 or down to stall speed? And that's what the Fed and what I would be, and I am watching for. If it just is sluggish, 1.5, 1.75, and unemployment kind of inches up, but is not running away from us, I think then I want to do nothing until I see some improvement in inflation, and we're likely to see the opposite. We're likely to see a backup in inflation, which makes me want to pause. The Fed just got done in a 2-year fight to fight inflation. They had the transitory episode. They were late in raising rates, stopping the bond buying, and they've gotten down, let's say, to the 20-yard line or the 10-yard line, and they really, if they can avoid it, don't want to, stop the fight here unless there's a compelling move up in the unemployment rate. And so when people say, will the Fed act, they'll act, but they'll be more reactive than proactive, and they need to see a meaningful, I think, deterioration beyond what they put in the SEP, the Summary of Economic Projections. I think the average was 1.7. My guess is they need to see something worse than that and a higher unemployment rate. And so they're going to be more reactive and more constrained.